Hi, good evening, everyone. Welcome back to the channel. So this is going to be my final portfolio review of the year 2025. So it's been a good year on paper, but it sure as heck doesn't feel like it. So let's go over what I will call a tale of 3 years. So 3 years and one, it's been quite the year. So obviously Schwab spent most of the year here, and this realized gain and loss still shows a very pretty amount. Um, so my win-loss rate over here ended up over 90%, but um, what's happened, there's a lot to unpack here. So January and February were great. March and April were rough months. I learned a lot this year, and as I always do, I become a more experienced trader every year. But the losses I took here, I want to start off with this. Some of these were unnecessary. Um, I didn't quite refine my strategy early in the year. But obviously there was some stuff. Hey, welcome. He says, welcome from Minnesota daycare. That's funny. But anyway, so there's a lot to clarify here because on paper, this looks great. This looks like, wow, coach, you're rolling. Like, why are you still working? Well, uh, we'll talk about that. Um, but so this obviously, before I moved the accounts over here to Fidelity, this is where I was basically 3 quarters of the year over here. And you can pretty much see every trade. So a lot went well, and some stuff didn't. Look at this. I held Uber stock at one point. Um, Taiwan Semiconductor. I wish I stayed in that one. So a lot of these trades, what I was doing, I was buying back what I was selling too soon. Could have just kept a lot of these open and realized all of the premium basically. Took some losses here. Of course, had some big wins. Ironically, SMCX, I had some of my biggest wins this year in SMCX, but I also ended up having some of my biggest losses in SMCX. And I'm to the point, I don't know if I'll even touch SMCI or MSTR. I call those my gruesome twosome. Those I wish I could just get out of both of those at this point. And the portfolio, if I didn't have anything to do with either of those companies, things would really be great. But anyway, you'll notice here a lot of SMCX trades early in the year. I don't know what's going to happen with that company at this point. It just SMCI basically just keeps dropping and dropping, and I truly don't know why. Um, I mean, they've missed earnings twice in a row, and they just keep getting punished, I guess. So, anyway, so that's SMCI. You can see all of what I had here. I'm gonna just run through all of these. A lot of NVDL, a lot of money made in NVDL this year. I've already gone over like the totals in another video, but I did get assigned on NVDL last week at a strike price of 90, and it's basically a cost basis of 75 given the premium I took in. You'll see a lot of wheeling in and out of NVIDIA this year. Um, you'll see that a lot, and then MSTY, MSTU. That's my other. I call that my other garbage one. Although I've made some money in it, but that's my other garbage one. I over allocated myself to it. CoreWeave, Connell, Chipotle. As long as it's a stock, I'm fully bullish on it. So that's that. And then some of these came in the Roth IRA. You'll see these numbers here. Now, ironically, after I got assigned on stuff at Fidelity, because I'm going to go over Fidelity next, but after I got assigned, so December 19th was a big day for me, and we survived that day. Obviously, we're still here, right? So, let's see, I own NVDY and Vanguard and still have yet to receive my dividends from this past Friday. Be on the phone with them and be like, where are my divvies? Where's my divvies, bro? Better pay them up. Anyway, so now let's go look at Fidelity. So Fidelity is going to be a tale of uh, two polar opposite ends of the spectrum. So let me see. Why did I do this here? While I'm on it, NVDL. So I got assigned. Like I said, the strike price was 75, even though, or excuse me, the strike price was 90, but the assignment price was 75 because basically 90 minus the premium times 100 shares. So it was about 15,000, which is roughly about what I'm up right now because it's at 89.76. Now I sold covered calls on it. I've already made $1,100 on the covered calls. But let me get over here to the, let's see, closed positions across all my accounts. So I have my accounts named over here, just like we name our pets and we name our kids. I name my accounts. So let's do this over here. Hold on just a second. I've got to change my display positions. I always forget, that I'm gonna use these on a video. And of course, when I'm playing around with this on my own time, I'm like changing my display preferences and whatnot. So let me just change these back really quick because obviously, I mean, I love all of you guys, but I don't want to show all of you all my full, account numbers for obvious reasons. So let's do this here. There we go. We have them truncated now. So now I can show you all Fidelity. So Fidelity is going to be over here. Now, if you all like this, please remember to smash that like button. And if you super chat me, we will be sure to donate to a Minnesota daycare. We got to take care of people, right? I just said that because a commenter in here mentioned something about that. I don't presume to know anything about that, but I'm just going off of my comments that I have here. So anyway, all right, to Fidelity we go. Now, I am going to point out to you all also, I get income from what's called a fully paid lending program. So here we go. This is what's happened. Look at what I did. So the account that I just showed you, the 238,000. I went ahead and blew that account up when I moved it over here. So I lost about 73,500 of that. But like I say, Fidelity over here is a tale of two extremes. So all in all, you'll notice for 2025, net and net on the Fidelity side, it's up about 157. So if you add up this 157, 456.78 to the 238,000 over here at Fidelity, we come out with almost 400,000 for the year, which it's honestly hard to believe. Like you would think I would be ecstatic about that. Um, so it's 395,532.57 to be exact. So that's what I made this year on paper. But why am I not overly gleeful and overly excited right now? Because in the account right now, there's a lot of losses I'm sitting on that are also paper losses. But I have to make a decision here because right now on 238 minus 73, the difference between that, I owe obviously taxes on at my marginal income rate. So that's quite a bit of tax, probably over like 50,000 or so. So what I have to decide, because unlike, apparently there are some channels on YouTube that actually don't care about taxes, but on here we do because taxes are mandatory and, it's our duty to pay our taxes, right? So on here, we've got to obviously be able to do that. So what I'm thinking about doing, I just mentioned my two garbage funds, MSTR, which uh, anybody that wants to explain to me why that one keeps dropping, I'd be happy to entertain your explanation. Because, like I said, we've got all the factors pointing to a bull market in 2026. We've got tax cuts coming, no tax on tips. We've got all of that. We've got obviously interest rates being cut. We got a new Fed chairman coming in. We've got quantitative easing, which is a big one. Quantitative easing will prop up the market in the short run or the long run, but either way, it will prop up the market. So we've got all these things moving, but yet we've got AI companies and stuff, that are dropping. We've got companies like SMCI that continue to drop, and MSTR that just continues to just bleed market cap every day. So those I call those the gruesome twosome. Those, and I know I'm talking about growth here, so I'm losing a lot of you all here for whatever reason. I can't talk about dividends in every video. A lot of what I do happens to be growth, and I'm literally showing you all a freaking almost $400,000 gain. So, but it is a paper gain. So anyway, so taxes. I know taxes bore us. I know they put us to sleep. I get it. If I'm not showing over 50% dividends, it bores you all. So, but this is reality. This is investing. Investing's more than just dividends. Remember that. So, anyway, so you see here Fidelity, you see this across, and obviously I'm going to move more accounts over here because another stream of income that I get is I get paid a money market rate on the cash that I have. Basically, so the cash secured put strategy. So now that I've shown this, my former 401k, sometimes I think that money that we acquire, it's almost like there's karma in the money or behind the money or whatever you want to call it, energy, or you reap what you sow, whatever. Whatever you want to call the term, I feel like it's weird to me. It's like my former 401k, there's like better karma in that money than there is with the former Schwab, and you see the result. I've done a lot better with that. Taxes can be pretty confusing with options. Well, the broker classifies a lot of it as short term. It's weird because if you notice Fidelity, Fidelity classifies a lot of this as long term, but the majority of it is in retirement accounts. Schwab, unfortunately, classifies most of it as short term, which is going to be at like probably a 28% marginal income rate, which kind of sucks. Um, but I could say taxes are your problem and not mine after all, but I won't do that because my own taxes, after all, are my own problem. So, but anyway, obviously, you see a couple of blank accounts here. No profits taken in the home equity yet. I have a life insurance policy I'm going to move over next year, and then a pension from my old job that I'm going to be moving over. So you've got three blank accounts. So eventually, there's going to be one, two, three, four, five, six, seven, eight, nine. I don't know what this non-prototype is, but there will be basically eight accounts total. Most of them are tax advantaged retirement accounts. But anyway, so now if I go over here, so the stocks that I'm holding the bag on, or the ETFs rather, are actually paying me on the lending program. So I'm making a little bit of money here. It doesn't offset like the paper losses because the reason I'm not overly ecstatic right now about almost $400,000 realized gain for the year is because my accounts should be probably 500,000 ahead of where they currently are. I'm still in an okay spot, but I should basically, if we could rewind to October, where I peaked out in October is like 500,000 ahead of where I am right now. So it doesn't really feel like I did anything. If anything, I'm flat for the year, net and net. So I'm thinking about, long story short, I'm thinking about taking a tax loss on some of the garbage that I'm holding, so that I can obviously offset, what I owe. I have basically 48 hours to do that if I so choose. And I just might, because if this thing, I kind of went out of both of these actually. So what you're looking at here is money I'm making on SMCX and MSTU, but it's chump change basically. It's, what do they call it? It's like a needle in a haystack. But basically, if I sell these and, I do the cash secured put strategy again, it's a much lower price at this point. So what I want to show you all, because I'm doing obviously the wheel strategy still. So I'll go over open trades that I have now. I've done a lot of them on AI companies, basically. So the newest one I got into, I believe, is called Nebius. So let me just run through the cash secured puts that I have open right now. These are going to be, let me go to overview here. So I've got Applex, I've got CEGX, Celsius Energy. I have a trade that I'm up 30% in. I own some Chipotle, the CoreWeave leveraged ETF. Datadog is in the crapper. METU, that's the leveraged Facebook one. MSTU's garbage. I could probably offset my taxes just with that. That and SMCX basically. NVDL, I have puts on NVDL. That's been my best fund for the year. SMCL, Granite Shares was nice enough to create an options chain on that, but turns out, that really wasn't necessary, I guess, because anything SMCI related has become utter garbage. And then so I still have some puts on SMCX, which I might have to just end up closing those, and then just trade other stuff basically. Funny thing, I did a trade on Broadcom AVGO, but the moment I did the trade, the stock missed earnings. So, that's what I say about my short-term timing. I've got AMDL positions in Apex, BEX, CrowdStrike. I also, everything I talk about, I pretty much do. So Highbill, I did some of that. MUU, I'm up 25%, and ORCX is flat right now. PTIR, and then Teckle, I'm doing the wheel strategy on Teckle. TQQQ, I've got a call open, and of course, I've got a lot of WPay. And then let me go over. So the big account is my former 401k. Now, in my Roth IRA, I opened up some Applex, some CEGX, Fubo TV, which is way down. I thought it was going to start recovering. METU. And then let's go over the 401k over here. So I've got some Kava, CEGX, obviously some NVDL. I've got covered calls that have made it's 73% in one day, essentially. ONDS, ORCX, I'm up there. PTIR, SMCL, TQQQ. I'm trying to wheel back into TSLL because TSLL is actually what took my Fidelity earnings over the $150,000 net threshold. And then NBIG is the leveraged, Nebius one. So I have that open. And then with the money market account with Fidelity, I have about another 3,000 a month that I'm gonna make just in basically what's held in premium from cash secured puts. I'll basically make money market rates on that, which I've been doing for the last 3 months. So that's about another 3,000 per year. It's almost like dividend income, but it's a lot safer. So anyway, folks, that's pretty much the portfolio review for this one. I see we had a, you know, record-breaking audience here. So I see, growth and making a lot of money doing the growth strategy bores you all. You all just want dividend content, I guess. But unfortunately, I can't just peddle dividends all day. So, anyway, folks, I hope you all liked what I showed you. I showed you all a lot as far as personal info. So, smash that like button. It would help me out, and I'll see you in the next one. Take care. Have a good night. Bye.